Hello everyone and welcome to Investing Angles. Today we'll discuss market map from different angles, and we will start with the dollar index. We will discuss volatility, then we will move to major US indices like S&P 500, Nasdaq, Dow Jones and Russell. We will discuss the cash indexes and futures, and after that we will touch point on the biggest sectors of S&P 500. We'll also have a look at huge stocks such as Meta, Microsoft, NVDA, Apple, and a few more. And then in the end, we will discuss a bit more about Microsoft, what is happening with the stock and what should we expect in the nearest future, and we'll end up our session with a quick analysis of TLT and the yields. Alright, so let's begin. Before we begin, please subscribe to our channel. Make sure that you always know what is happening before. Alright, so this is Volatility Index from candles perspective. This is the chart. Right now, today, we are seeing a strong confirmation of a bearish move, and the chances for a continued move lower are fairly significant. Also, it's worth noting that the 50-day moving average crossed the 200 days DMA in a bearish cross. So technically it is possibly a signal for a long-term bearish move. If we look at the few different frames, so the 2-day frame and the 3-day frame, they also closed with bearish engulfing, and the chances for a move lower are significant here too. So from the perspective of the weekly, if we have this weekly candle in 2 days bearish engulfing, we should expect a lower volatility for a couple of weeks down the road. Alright, so that's the volatility, and the most interesting, I think, today closure was on dollar index. You see these 3 red candles. This hammer closed today, but the interesting thing that technically it closed bullish, because the closure today was just 0.2 basis points above this the low of this green candle. Technically, these 3 are within the range of the green candle, and it is a bullish formation. Let's see if candles are right this time. Check the dollar index tomorrow. Most likely it is going to go up. Alright, so that's for government bond yield. 10-year formed at our top on a daily frame. Quite strong signal. Perhaps we should see a weakness in the rates and the decline for foreseeable future. However, the trend is so strong here, the daily, weekly, and especially the bigger ones, that we need to see at least a weekly confirmation, a weekly message, bearish message. So far, it is forming a dark cloud cover, but we'll see. 2 more days to go. Alright, so let's move on to the indices. What do we have here? So today was definitely a strong bullish move, and from the candles perspective and even from technicals perspective, the short-term bottom has been formed for SPY, Nasdaq, Dow Jones, and IWM for Russell. The interesting thing that while these candles, the first 3 are green, the IWM closed with the red candle and below the 100-day moving average, which is very interesting. So if we have a red candle tomorrow, this could be a reversal technically, but we'll keep an eye on this. So these candles, the green ones, could be bearish or bullish depending on the closure tomorrow. And why I'm saying though, because one day move is not sufficient to form a bottom from the candles perspective. So if we look, let's say, for on a 3-day frame, which is this one, we can see slightly different story. For example, that Nasdaq and Nasdaq, Russell, and this SP 500, S&P 500, they are not as bullish as they could be on compared to the daily frame. So they need a confirmation here. The only one that is strongly bullish is Dow Jones, but again, having all these in mind, we would need to have a strong confirmation. And particularly this would be important for the weekly closure. We would need after such strong move. After such strong move, we would have to have a weekly closure, weekly bullish signal in order to reverse this trend. All right, so let's move on. But that's not everything about candles and technical. So today there were also big closures for the futures, and this is the map right now. What I'm showing here is like S&P 500 and Nasdaq futures 5-day closure, but we have also today a 10-day closure, and I would like to show it more closely. This is okay. Let's hold it speech. So what we are seeing here is that the freshly made MACD bearish cross on the 10-day frame for S&P 500, Dow Jones, and Russell. They made it today. Nasdaq closed just a few basis points before crossing. So technically, it crossed already after opening the futures for the next period. But the 5-day frame is strongly bearish here, and you can see that the cross is expanding. And even if we look at the 5-day frame for Nasdaq, it's not particularly a bullish formation here. So we have a strong bearish candle, bearish engulfing, and we have 1, 2 candles. And if we have another one, third one here, it would be a nice setup for following 3 methods. But we would have to wait for another 5 days for that. All right, so that's the big warning from the perspective of candles and technical. So we have a MACD cross on the 10-day frame, and it's a big one if we compare it to the previous ones. All right, so that's the technical concerns. Let's move on to the chart. Oh, that's the same chart I discussed yesterday for the 10-day cross, 10-day MACD cross for the S&P 500 futures. So if it is happening right now, and if it gets expanded in the next period, then we might see a decline somewhat similar to what we had in the year 2022. Well, let's move on to the next one. So this is our chart onto our frame. So what we have here, there are two major counts right now. First is bullish, assuming that ABC formation completed this correction, and now we are looking for an impulse up here. So wave 1 and 2 and 3 potentially formed. 3 can get extended, obviously, but as multiple frames are oversold right now, and we are looking for a technical correction tomorrow, there is a chance that the index moves down a little bit, and this is the level to watch. If from Elliott Wave perspective, if wave 4, which we expect next, crosses into the territory of wave 1, the impulse will be broken, and in this case we would likely see it continue to continue to move down. And right now, the bearish count, the red one, 1, 2, 3, 4, fourth wave 3, is still valid. It's not crossed yet, but if it moves higher, we would have to reconsider the count here. All right, so that's the futures. This is the micro chart for the SPY. Technically, it is the same. The only concern here I have that the first wave of the bottom is not necessarily an impulse. It fits more a corrective count, and I'm very cautious about it. So I'm looking for now for wave A, B, C potentially, and again, this is if it still can be an impulse 1, 2, 3, 4, 5. However, if the move tomorrow, if the index moves and breaks this level 585, the index formation will be broken, and we will be looking for a bearish continuation for this for the index. Okay, so moving to the next slide. So what we have here is are the sectors. Most sectors closed today with green candles, and especially the strongest was financial one. By the way, as we predicted yesterday, we said that financial is confirmed a bottom here, and it was expected to move higher today, and well, the only thing we couldn't foresee such big jump. And the same we were saying about industrials. Not sure about technology. Technology is looks bullish for now. It may form the bottom, but if we look at the bigger frame, for example, like a 3-day frame, this is far from being bullish. It is technically a bearish thrusting line, and it is a bearish continuation pattern. And the same thing if we look at the weekly frame, for example, we have a just freshly confirmed top, and this candle here is trying to negate it. So it needs to move higher. If it does, well, we just say, okay, so it's against the odds, because right now odds are with bears. All right, so this similar situation for other, I think for other sectors like for financial and industrial. If we look at the 3-day candles, so this is bullish for now. But if we if it stays like this, it will be a reversal for industrial. Similar conditions are for financial, so it's on track for a strong bullish engulfing on the weekly frame. And well, speaking about the weight, it would be interesting to see if technology, for example, closes with bearish formation, and financial and industrial with bullish. So technology is having much bigger weight, and we'll see how this continues. So consumer staples are clearly bearish. We discussed already healthcare in previous update, so we are seeing this as a potential bearish flag, and it's about to break. It can go a bit higher, but the structure here, we looked at the micro level, and the structure here is corrective, and the chances for a move down are fairly high. Energy is technically bullish. Utility, let's have a look at the bigger frame. So 3-day frame, there is a bullish engulfing with good chances to move higher. Speaking about the weekly, well, weekly needs to work a little bit more in order to reverse this build up here. Okay, and consumer discretionary, the last one, 3-day frame is bullish. Chances for a bullish ride are fairly significant here. The same for weekly, a little higher, and we will have a bullish reversal here. All right, so let's move on to big stocks. Technically, they closed with with bullish candles. However, I'd like to say that one candle after such big write down, it's not enough to reverse the trend. So we need to see a bigger formations. For example, for Microsoft, it's right now it's a piercing line on a 3-day frame. And it needs a confirmation. The confirmation may arrive only on Monday. Speaking about Amazon, Amazon is not even bullish, so it's a thriving line here. And if it closes the week like this, the chances for a continued move down will be higher. Apple. This is the 3-day frame. Technically, it could even be 3 black crowds on a 3-day frame, and this 3-day candle is definitely bearish. This is a thrusting line, and it is viewed as a bearish continuation candle. So we might see a bounce higher for 1 or 2 days, but the chances for the next candle to be either moving horizontally or moving down are fairly high. And the last one I'll have a look is NVDA for 3-day formation. This is a clear in neck formation. So you have a bearish engulfing big one, and the candle is just sitting on the open the closure of the red candle with aligned with the closure of the green one. So technically it's in the neck and considered as a bearish continuation. The chances here for continued move down are fairly high. All right, so that's let's move on. Before we move on, this is our website, Investing Angles. Right now we are offering a couple of discounts if you're interested in live trading, which is a swing trading room. It always keeps us on the right side of the market, and we right now have you can check information here. We have all trades recorded since the inception, which was 2 years ago, and up till now we've made over 53% on this. Video library are here, and if you're looking for indices, commodities, currencies, treasuries, well, everything is here. If you want to check only our free occasional articles, you can sign up as with a free reader subscription. Okay, so let's move on. Nasdaq futures. Technically, the chart is very similar to what I showed you for S&P 500. The same critical level here. So if Nasdaq pulls down tomorrow and breaks this red line, then the index or the impulse upward will be broken, and we would consider this as a bearish flag. All right, so now I wanted to talk a little bit more about Microsoft. So Microsoft is concerning from the candles perspective. I already showed you that it's not fully recovered from the bearish move on 3-day frame, and it needs bigger confirmation. And this is the monthly frame, monthly closure. If you can see this one, in December it was a gravestone doji, and we know that this doji usually reverses the trend downward, although and this attempt to reject this doji is fairly normal. So if the candle goes from red from here, that would be absolutely fine. And speaking about Microsoft, we have this technical concern. We are talking about it for a couple of months already. So it's a similar thing that we had. Only now the indices made MACD cross on 10-day frame, but this is the monthly frame for Microsoft, and it's been ongoing since November. It's slowly deteriorating, moving down, and well, this monthly gravestone doji is not a good sign at all. Speaking for that perspective, and yes, you can see that we have a fairly similar technical structure for this particular cross and the cross that happened in March 2022. So the chances for Microsoft to go down further are quite high. And speaking about the Microsoft Elliott Wave perspective, so potentially we had an impulse down in July, August, and since then Microsoft has been moving in a corrective fashion. So what we are seeing here is this particular wave, so this one. So this wave is clearly corrective. There is no other way to consider it as an impulse. So technically the whole wave here is corrective. It can go higher. It can go higher, and let's say if it moves here, and let me write. Okay, so if it moves here, and then we will still expect it to move down. And speaking about the ABC formation, wave B can even surpass, can even make an all-time high, can surpass the beginning of wave A, and it's still going to be a corrective wave. So whether it goes and makes a new all-time high or not, we don't know, but there is a chance. Microsoft made a move today, but we are expecting it to move down somewhere here in the 390, 370 range, either with this move or with the next wave. Okay, so that's for Microsoft, and let's move on to the last piece of our discussion is TLT. So TLT made a very strong technical move and it is supported by multiple technical indicators, divergence, and and other. So what we are seeing here, it's technically moved above the major resistance, now support level, and it also made a fairly strong bullish formation on a 3-day frame at the same time, bullish engulfing. So if this momentum continues, there is a very good chance that the weekly candle would form a bullish engulfing of some sort, and we would see a couple of weeks of move up. However, I would like to mention that the trend here is still bearish, and we see that 50 and 100 and 200 days moving average, they are moving down, and 100 and 200 can even make a cross, a bearish cross or a death cross in a couple of days. Well, and these lines will be strong resistance for our move. So my current estimate that if the weekly formation, if the weekly forms bullish engulfing, then probably towards 92, 90, 91, 93 area, we'll see a ride. Okay, so that's all about TLT, and this is our chart. So if this move becomes bigger, then we would consider this as a wave 1, and this would be potentially wave 2 of a bigger impulse down here. So that's the perspective for now, and thank you very much for watching. If you have any suggestions regarding the format of this presentation, or maybe if you would like to see certain stocks to be discussed, please comment below this video, and we will take it into consideration. Other than that, don't forget to subscribe to our channel, that you can always know what is happening, and also check our free reader subscription at investingangles.com, which allows you to look at and read the free articles that we occasionally share with generic public. Alright, so that's all. Thank you very much for watching, and have a great day and happy trading.